Hello, friends. Welcome to Banking Frontiers. My name is Manoj Agrawal. I'm the group editor at Banking Frontiers magazine. And today we're doing a panel discussion on cybersecurity. And in that, we're looking at the topic of behavioral insights, how customer behavior, individual behavior in the digital ecosystem is something that banks and financial institutions can leverage to offer frictionless commerce, frictionless transactions, as well as enhanced security and safety to ensure that the transactions, the data privacy, the cyber security is taken care of. I have some very eminent panelists with me, and I will ask each of them to briefly introduce themselves. Can we start with Mr. Ratan Jyoti?
Yeah, good afternoon, Manoj. And my name is Ratan. And I am CISO for a bank called Ujjivan, a small finance bank. And Ujjivan, a small finance bank, is a digital bank primarily. And you know that in the digital arena, there are a lot of cyber attacks, lot of cyber frauds. So I try to learn and prevent those attacks and help my customers to remain the cyber crime free or cyber fraud free.
Yeah, hi everyone. This is Abhishek Upadhyay. I head the personal loan business for Navi Technologies. We are a new age digital lender where we have an app and you can avail personal loans within minutes. So this is first in the industry where the entire process is digital, and cyber security and customer security is very important to us because we see a lot of cases where innocent customers, get duped and data is being misused, and we want to protect our customers against the syndicate frauds.
Hi, everybody. As suggested, my name is Dhananjay. I'm the CISO for SBI Cards based out of Gurgaon, and being in the industry for a little over 22 years. I think that's it.
Yeah.
Thank you.
Thank you and welcome.
Yeah, hi. Good evening, everyone. I'm Naveen, Janardhanan. I'm with Yes Bank for the last 6 years, and I take care of the fraud risk management team. I have an overall experience of 20 years, of which close to 17 plus years in managing fraud risk, especially the payment space. Looking forward to have an engaging discussion with all the eminent panelists. Thank you.
Hi there, everybody. My name is Richard Booth. I work for Biocatch. I've worked in the fraud prevention industry for 20 years or so now. My early career started in the UK and Europe, and about 9 years ago I moved to Australia, and I now look after the sales business for Biocatch across Europe, Middle East, Africa, Asia, and Japan. Great to be here.
Thank you, Richard. Thank you for that introduction. So let's begin. My first question is this. There are all kinds of frauds in the financial space, but what kind of frauds are having the biggest impact, either in terms of numbers or value, or maybe in terms of reputation risk? And what are your emerging concerns about these frauds?
Pandemic has seen a lot of frauds and a lot of newer type of frauds. Type may not be newer, but the style of the fraud has been very, very different. And so I call these as a pandemic-induced frauds. So we have seen the large number of phishing attacks, and different survey has predicted that they have increased from 400% to 600% in last 2 years. And I'll give you a simple example. We have seen the phishing attacks to lure customers, and these phishing attacks are basically the fraud attempts, and they try to encash the human psychology, human fearness. So in the beginning, when the COVID was first noticed, we noticed that a lot of phishing attacks were there in the name of COVID kit. Then while the COVID grew further, the new attacks were around the COVID medicine. We saw a lot of phishing campaign in the name of COVID vaccination later on, and I will not be surprised if next for booster dose a new campaign comes up. And a lot of customers of ours and for the other banks and in the other industry were duped out of that. The second most significant thing that has happened in the cyber fraud front is the ransomware attack, where due to some problem the ransomware enters your network, they exfiltrate data, and then they encrypt your entire database and entire system, and they ask for the ransom. So you have no choice but to pay for the ransom and get your data back. So these are the two emerging frauds that I have seen in the last 2 years in the COVID time. Beside that, work from home have increased the fraudulent thing. The bank's data is at risk. Organization data is at risk in the premises of the employee, and third-party integration have been another area where we have seen a lot of frauds in the cyber area. So these are the few area where we have seen new and newer type of frauds.
Thank you, Ratan. Absolutely spot on. These are many of the things that I have also read about. Would someone like to add to this a new dimension, or would someone like to share some figures?
Yeah, Manoj, I'll probably share a few examples from what we have seen, some of the things which have affected our customers as well. So typically what we have seen, and as Mr. Ratan rightly said, it's pandemic induced. As after, because there was a push to go digital since many years and the pandemic kind of accelerated it, I think the people who have a comfort and knowledge about how the digital payment works is not up to the mark, and fraudsters kind of take advantage of that. And in many cases, we have seen UPI being being the target source for these kind of frauds, where phishing attacks in terms of let's say malintent collect request, impersonating the name of the company and creating a similar name of the company and saying, hey, I have a loan from XYZ bank or NBFC, and I'm sending a link which kind of resembles the handle that the NBFC or the bank usually would have, and then they collect money from there. And also in terms of the whole process, where the PIN has to be entered for the money deduction, people take advantage of the fact that UPI takes time to settle for, let's say, 2 hours, 3 hours, and in the meanwhile they will reach out to somebody and say your payment has failed, and hence you need to make the payment again. So taking payments on links which are not belonging to a trusted source, taking repeated payments under the guise of payment failures or things like that. I think these have at least I've seen a resurgence of these frauds in the recent past. Also, one more interesting modus operandi that people have developed is that they are creating similar named bank accounts with some of these digital banking products that are there in the market. So they will open a company name which is very similar to, let's say, yours, and create a bank account in that name. So to a untrained eye or to a non-suspecting customer, this looks like a very genuine transaction, but the money in the end goes to somebody else and not to the intended beneficiary. So while before this was not a challenge, but with increased adoption, I think somewhere these gaps are still there and people are taking advantage of it. So
absolutely. Website impersonation has become such a big issue, not just financial sector, everywhere.
Right.
If you call someone for, let's say, repair of your AC or fridge or something, you could many chances end up on an unofficial site pretending to be the original brand.
Right.
Richard, may I ask you for some, both our gentlemen, Ratan and Abhishek, have given an India perspective. Would you like to give us a broader perspective? What do you see in other countries as well?
I certainly think what we've seen globally is that as banks have strengthened their defenses over the last few years, criminals are starting to focus on human beings as the weakest link in the security ecosystem. We've started to see in the past, criminals would have attacked the device or attacked the network. Now the whole concept of social engineering is being pushed to a whole new level as criminals understand that actually users are probably the weakest link in the security defense systems. So we're seeing a lot of scams. We're seeing a lot of mule accounts being utilized to launder money. We're seeing data being stolen through merchant compromises, but then being replayed in a lot of different creative ways. And obviously what the pandemic has done is created a lot of potential for criminals to utilize the misinformation that's going around on the internet, on email, on social media. And so consumers are struggling to differentiate between, good information and questionable information. And so they're, more easily falling victim to some of these scams. So we're seeing that not just in India, but globally. All of our customers are really struggling with scams where fraudsters are impersonating genuine customers. Fraudsters are impersonating banks, trying to get more information out of genuine customers. And obviously business email compromise is a big part of how businesses, small and medium-sized businesses, are being duped into transferring larger sums of money.
That's interesting, Richard. May I come to our friends from Yes Bank and SBI cards? What do you see as the solutions to these challenges? What kind of proven solutions? What kind of emerging solutions do you want to talk about?
See, Manoj, I would like to certainly agree with what Ratan and Abhishek had said. And it all boils down to the case of social engineering scams, right? Fraudsters trick the customer with various deceiving techniques, right from the case of a normal call claiming to be your card is blocked and you will have to share your details to unblock. And we have seen instances where fake business listings, you just voiced out that, right? I have a problem with a particular company. I go to Google and search for a call center number. The first thing that lists out is a fraudster number. And I call them up. And there we have seen so many customers falling prey to this kind of fake business listings where they think that they are calling to the right customer care of a particular company, whereas in turn they are speaking to the fraudster. Plus, we have seen instances of a device being completely taken over. See, the biggest challenge today, when the device is being taken over, we have seen instances where fraudster sends a payment link to the customer in terms of KYC updation for a telecom operator. That a telecom operator is having a problem, you'll have to, I'm sending you a link. You do a transaction. I don't ask for any card information to you. I have asked you to download a particular application. I'm having an online view of what is happening in your mobile. Thereby, I ask you to enter your own credentials in your own device. So you are completely, into confident that you are not revealing any card details over the call to me. You're not revealing any OTP to me. But I am sitting at my desk. I've seen what is your card number, what is your CVV, what is your information. And then parallelly, when I generate a transaction in parallel, I see the OTP also in your mobile. Now, it all boils down to the fact of, customer awareness about these kind of social engineering scam. What I see as a major threat, Manoj, I am sure that all my panelists will also agree that in a country like India, where we have a diverse culture, diverse languages, the kind of customer education and awareness that more and more we penetrate into a local language kind of a communication to inform the customer about these scams or these kind of awareness message about how important not to divulge their card information or account information, for that matter, even personal information. So that is going to be the key factor, because in any ecosystem of these payment transaction, customer is the first line of defense. No matter what kind of control that banks may put in place, the moment customer divulges all the detail, then it becomes really difficult. So I feel that having a customer education through local languages will have a deeper penetration, and that will have a larger impact on the ecosystem as a whole.
Right, Navi. Thank you. That absolutely makes sense. The banking and technology itself is such a quickly evolving field, rapidly evolving field, that even the common man has difficulty keeping up. Then on top of that, there are all these issues of frauds and rackets and whatnot. So there's another level of customer education. So really, we need to simplify this kind of education. I see communication coming to me as a customer from my where I am a customer at banks and insurance companies, which is pretty, formal English. It doesn't immediately click. You have to read twice to understand what they're saying. So I think it also needs to make it more vernacular and more, the language needs to be simplified and easy to understand. Not everyone is that literate. Let's look at some technology solutions, maybe Dhananjay, or techno kind of solutions. What is experience? Because customer education is going to be a very long 10, 20-year journey. We can't afford to have gaps in the security. Dhananjay, how is yours being the largest card base in India? How do you, and your cards being used internationally as well, what kind of checks and balances are you looking at?
Yeah, so Manoj, just to pick up from where my fellow panelists actually, I think they covered the threat landscape quite, or the kind of risk quite well. Actually, I think few things just to pick up from where I would like to pick up is that in the pandemic in last 18 to 24 months, what we have seen is the numbers have increased and it has become more organized. Maybe some of the people who may have lost jobs, etc., may have picked up this as maybe a way of earning actually. So the numbers have increased, it has become more organized. Though I would say we have not seen any much of a difference. The mode of operandi, the social engineering, the fake website or SMSing, where SMSs are being given, those bit links are being given, asking people to share their information and all that. Those are traditionally there, but the numbers have increased multiple folds. That's what we have witnessed in last 18 months actually. Again, I think customer education absolutely is very, very important, and I think there is no second thought on it. But having a technology backing actually, so having a fraud management system in place where you look at every transaction, look for those anomalies actually in that. Okay, and again, I don't think there is one silver bullet that just put one system and everything is done actually. Having multiple systems starting from the network. So again, I would say a merger or a kind of basically a combination of security, traditional security tools with fraud detection tools actually. I think that's what something is the need of the hour, and that's where we are started working, where we try to detect an anomaly on the network side actually, and then correlate it with a transaction actually in the fraud management system to detect a fraud. Because in some cases what we have seen is because of the organized way these people are trying to operate, the bad actors, in some cases if the customer is not even involved actually, so they're like doing a password guessing, for example, or credential guessing, or if the credential got leaked. In one case, an interesting case where the credential got leaked from another website, where another portal. Okay, so like we all know the Big Basket leak. So in Big Basket leak, there were all the credentials which got leaked. Now, if the customer has kept the same credentials in Big Basket and in some other website, they do a hit and trial to just log into the other websites. And if they are successful, they try and put the transactions through actually. Now, there is no customer involvement here. Customer does not even know whether their credentials got leaked in Big Basket, for example, right? So we have come across such instances. So just putting a fraud management system alone may not help in this case, because the fraudster is accessing the account using the right credentials actually and making a right transaction. But detecting it before it or the network layer, because there are multiple failed login attempts, that guy is doing hit and trial, same IP, multiple people are trying to log in and things like that. So doing a correlation between the network security logs and the logs which are at the system layer or the system level, I think that has become very, very important right now, and I think that is the way forward we look at.
Okay, that's interesting.
So Manoj, just to add up, I completely agree with what Mr. Janardhanan has voiced out. From a technology point of view, what is more important is the fact that, like the example that he talked about on the Big Basket, where the credential of the customer has been compromised. So no longer a password or a password is safer. If somebody has logged in through a custody and a password, I can no longer take that as a safer login. That customer is the one who is logging in. Thereby, it is important for the banks to profile the customer, the behavior of the customer. How does he transact? Where does he transact? What devices that he uses for using a digital transaction. So these digital attributes associated with the transaction and profiling the customer based on the digital attributes is going to be the key. How am I going to differentiate a customer's transaction vis-a-vis a regular transaction if I only look at the end usage? For example, a Paytm transaction, which I do using my regular laptop, my credentials have got compromised. And that credential, using that stolen credential, somebody is trying to transact on the same Paytm. But if I look at only the transaction data, both the transactions are from Paytm. There is no difference at all. But if I look into the finer details, that this particular device which currently being used has not been used by this user in the past, and the transaction value, time of the transaction, browser from which the transaction is logged in. So the technological advancement and the kind of lot of new things that has happened on the payment space has given avenues of lot of digital attributes as a part of fraud monitoring system that we can consume and write customized rules to strike the fraud at the time of origination itself, rather than waiting for the end usage.
Okay, right. Richard, since everything about the customer can be stolen, apparently except the device itself, the devices I think are still a little harder to steal. What is it about the device that companies like you figure out and try to create some service or security there?
So sadly, even the device is able to be compromised. We're starting to see a huge increase in remote access fraud, where the fraudsters go, you know what, if the bank is going to be monitoring the device, if I can convince the customer to install some remote access tool, and it doesn't even have to be a fraudulent tool, so they can use off-the-shelf remote access help desk tools, then I can piggyback on a trusted device. Now the bank actually enables me to perform my fraud, because if they trust the user's device, they're going to look at me with less scrutiny. So I think the philosophy around Biocatch is that everything the customer has, including their personal information, their passwords, and their devices, has the ability to be compromised. What is difficult to be compromised is their behavioral traits. And what I mean by that is, how do they type the password? A criminal that compromises a password is probably going to use copy-paste, or they're going to type the password without that muscle memory that we talked about when we were referring to the phone number earlier. When they are doing the payment, they might click through a different sequence of the pages, the web pages or the mobile pages to make the payment. They might hesitate at different fields where you're asking for different information. Obviously, if they're sending this money to a mule account, they know the account details off the top of their head. So they actually populate the destination account very quickly compared to a genuine customer who might be slower at typing in the destination account details. So when Naveen was talking about using these newer technologies to really combine the power of all this data, I think Biocatch's behavioral biometrics goes even further. So it's more than just the device, more than just the network. It's actually looking at how the user or the criminal is typing, how they're moving their mouse. All these things give even more insights as to whether it's the genuine customer or not.
It is the human behavior that you are able to look at and say whether it looks suspicious or
correct. I use the example, when my wife comes in and to the house and she's had a bad day, I don't need her to tell me, I don't need her to authenticate that she's had a bad day. I can just tell from her behavior that she's had a bad day. And so these are the signals that we're looking for. We don't need the customer to get their PIN or password wrong. We don't need to look at the specific device. We just know from their behavior that it's the wrong person.
Oh, okay. Interesting. Yeah, you're right. That's a good analogy. If I come to Ratan and Abhishek, would you like to add about this all external, not external, but this additional data that Richard and Naveen and Dhananjay have talked about? How are you capturing it, processing it, leveraging it, analyzing it?
So I think I completely agree with what Richard has mentioned. I think the current set of fraud detection techniques should go beyond what the user is giving us as an explicit signal in terms of entering a wrong password or something. And I think just to reiterate, first, I think the organizations should kind of ensure that the data that they collect as a company is secured first, because that is the first line of defense. I mean, data leaking out due to Excel files being shared, customer PII being shared without password protection, phone numbers being exposed. Now, these lead to a lot of small scale frauds, which are very easily avoidable. For example, one thing that we have observed before getting into high tech frauds is sometimes when you apply for a financial product, your KYC documents are collected as paper, right? As photocopies, or as sometimes it's being shared on WhatsApp. Now, without a secure environment being used for sharing these documents, these could easily land up in somebody's in the wrong hands, and they contain important information through which 2FA checks can be bypassed. Let's say I have access to your password, but I don't have access to your PAN or Aadhaar, right? But if you ask me for the last 4 digits, I think somebody has access to that, and things can go wrong there. So I think the first line of defense, I think, still should be to secure your own house, ensure nothing gets out, nobody gets in. On the second part, which Richard mentioned, was around creating, reading the signals in terms of behavioral biometrics on the phone. So I think creating a fingerprint of a user, like your thumbprint is unique, you create a behavioral fingerprint of a user as to what are the typical hours they spend on each step. Do they copy paste this information, or do they type it out? At what angle do they hold the phone? Like a fraudster is typically doing it at scale, so the angle is supposed to be different versus somebody who's used to holding their phone like this, or at a certain angle like this. These factors also play an important role. And even simpler things like the time of logging in, right? If somebody's making a money transfer at XYZ time, give us a lot of indication as to, okay, what is the nature of the transaction? If there are, I mean, and I'm sure these are already studied in the industry, and there are set patterns around it. But it is important to create a regular, or I can say a predicted behavior of a user, and then understand how the deviations are coming through. Let's say if the device or if the account is in somebody else's hands. So we are working on something like that, where we try to understand how often does the user change devices. What is the cycle? Is there a SIM card change being done frequently? And Android allows you to sort of get into the depths of understanding how manipulated is the device. And while there are sophisticated tools to spoof data, but then you can do multiple checks on whether the location is being spoofed, the device is rooted, and also on the kind of apps the user holds. So a typical user will not have a lot of, let's say, location editing apps or data cloning apps or remote access apps. As a common user, I would have very regular consumer apps on my phone. But if you see my app data and you see a lot of these, I would say, notorious or maybe uncommon apps in a user, that gives an indication that, okay, something might be up with this device, and this might not be a trusted device, because credentials can be cloned. But you can look at what the customer or what the device is showing as app data without even getting into usage history. You can just look at the kind of apps that are there and understand whether the customer is genuine, or whether somebody has taken over the device or the account. So we're working on some of these signals as well.
Actually, just if I can quickly just say, I fully support what Abhishek is saying. We recently did some research. Fraudsters typically have less than 10 apps on their phone because they just have like a Tor network app, like a IPGeo, fuzzy, type app, and then they just have a bunch of crypto wallets. But most genuine users have at least 50 apps, right? So you can very quickly see this is a criminal phone or this is a genuine phone.
Interesting. Dhananjay, I wanted to ask you a question in light of this, that all this kind of data that a bank can access about where they're accessing, what kind of data is there on the phone, what kind of apps are there on the phone, how much is this kind of all this external data trustable to make some kind of judgment? Does it lead to a lot of false positives, or does it really cut down false positives?
I'll say all these technologies are prone to false positive, and over time those false positives need to be worked out to reduce it to the minimal. But still, there would be false positive and there would be noise in the environment, because we are dealing with customer directly. It's not our user, our internal user, it's a customer. So if we put the rules, we tight the rules too much, then the app ratings goes down, the customer feedback goes down. So I think it's a very fine, I would say, thin line, and it's a very fine mix of what you can do and what we can do or what we cannot or we should not do, actually. Because we need to keep the business running, we need to keep the customer also happy. Because many times we have seen that some of these rules which detect a fraudulent transaction or somebody trying to do something are genuine things, actually. For example, like if we track the transactions from a same IP address, which is like a very traditional way of doing it. But if somebody is doing it behind a proxy and multiple people are accessing our website behind a proxy or from a mobile app, then the IP address is same, actually. And if we start blocking it, we see outages for that particular organization, actually. So I think so false positives certainly are there, and it has to be reduced over time. And we have to be very, very conscious before kind of making any changes in those rules. Put it on the monitoring mode and then get into the block mode and things like that, because it can hurt the business badly, actually.
Thank you, Dhananjay. Richard, a follow-up question is this: can all this kind of data be divided into two buckets? One which is more trustable, one kind of data that is less trustable. Is that possible?
Look, we certainly have the philosophy that anything you're asking the end customer for is probably less trustable because it's compromisable, right? Our philosophy is to try. We trust information or data that isn't necessarily able to be stolen, right? I can't steal the way someone moves their mouse. I can't steal the way someone types their password or enters their phone number or their email address. And this was something that was really important to us when we were recently working with an Australian bank. They came to us with a challenge. They wanted to reduce the sign-up time for their new credit card products to less than 2 minutes, including all the KYC and AML checks, everything. And we said, well, we can get that for genuine customers, right? Because we know the way that a genuine customer fills out an application form. And so we can reduce the friction, reduce maybe some of the checks needed, because we look at the way they complete the form. Whereas a criminal, right, they will go through it much quicker. They'll be pasting a lot more data because they've stolen the information. They know how to fill out the form, right? But we just know that they're doing it in a criminal way. So, our business, our philosophy is that, we trust information that can't be copied, that can't be stolen, a lot more than information that can.
So in cyber security, what model we are following is called zero trust model. So we do not trust anything, and then we try to authenticate a user based on the behavior, based on the static parameter, based on the dynamic parameter, and so forth and so on. So that is a system called continuous authentication. And we maintain our network integrity and all those things through the zero trust solution. So similar solution is required for the fraud management also. Then it would be very helpful for customers also.
And how do you relate zero trust with improving customer experience? Because customers seem to be wanting everything frictionless increasingly, whether it is the most sophisticated customer or the most elementary customer.
Yeah. And in the BFSI in particular, the frictionless experience is the key. But the key is also the security. So there should be a fine balance between the security and the user experience. And so if you read the recent RBI guideline on the digital circular, they talk about the FSP. For the first time, they are talking about the FSP, which means the functionality, security, and performance. So not only the security is given importance, but functionality and performance is also given the importance. So unless these three are together taken care, well, the apps and the solutions are adequately tested and then released from all three per se holistically, then the user experience will not improve.
Naveen, if I may ask you, with different customer segments that a bank has, all the way from rural customers to urban customers to SMEs to corporates to government as a customer, with different customer segments, how do you see usage of different technologies or different approaches to making the whole thing frictionless? Because adding too much friction, you start losing customers. But even if you are not secure, then again you lose customers. Chicken and egg.
Absolutely. See, there is no one size fits all approach when you talk about risk management, right? You will have to, profile the customer based on their behavior, the type of customer that we are dealing with, a retail customer vis-a-vis a corporate customer. If you take a card, how the retail card is behaving vis-a-vis a business card or a purchase card or a corporate card is being. So it all depends on how you segment the customer and accordingly profile these transactions. And specifically when you talk about friction, see, while it's our endeavor of the entire banking community to provide a frictionless experience to the customer, but the hard reality is there are friction which everybody knows, right? Even if you want to do a regular payment transaction to a registered beneficiary every time, there is some sort of authentication that you will have to authenticate yourself, and only then you can perform. If I have to regularly do an e-commerce transaction to a particular merchant, then I have to authenticate myself using an OTP or a password. So that friction is always there. And added to it, RBI has, even recently has laid out a guideline that every domestic card or every card which is being issued in India is enabled only for POS and ATM transaction, right? Even the domestic e-commerce transaction is not allowed. Earlier, it used to be only the international transaction where the customer has a choice to select if we want to enable international. Now it is completely off. Only regular POS and ATM transaction is what it's a plain vanilla, card which is being given to the customer. Imagine that particular customer is a high net individual trying to do an e-commerce transaction. His first experience is, will be declined, right? So not only the friction, we talk about experience as well. At one end, we create a friction. The other end, the customer experience goes for a toss. Then it all boils down to the fact that how quick you are in terms of reaching out to the customer, explaining, educating the customer about enabling all the digital transaction or e-commerce transaction. How do we have to enable those things? So it all boils down to how quick you reach out to the customer, make him understand this particular aspect, make him enable the transaction, enable his card for that transaction and transact again. So it's a time of, while I cannot guarantee that it will be a frictionless experience, but what as a bank or a community we can do is to ensure that we make the experience more better in terms of, giving a pleasant experience, at least guiding him what has to be done. So secondly, on the friction part, when we talk about this, we are slowly heading towards that. RBI has already given a waiver for certain segment of transaction. We can still go ahead without PIN, right? For less than 5,000 rupees for a point of sale transaction, RBI has given a go ahead that as long as, there is no liability on the customer, you can still go ahead and approve a transaction without PIN. Similarly, we can work on there are something on the cards where if it is a trusted device, or bank can take a call in terms of allowing certain transaction of e-commerce without asking for a OTP, so that what you call as a silent authentication. It's not that I'm not going to authenticate the customer, but rather than explicitly asking for a OTP, can I do a silent authentication, which Richard talked about? If I have a confidence that this is the customer whom the account is being transacted with, can I move ahead with a silent authentication? But presently we are not ready, but that is how we are slowly moving towards, and it's sooner or later India as a country will soon move towards that. We have very much confident over that.
So I can see from the discussion that there are two buckets again. One is the low risk transactions, perhaps the low value transactions, and the other is obviously the high risk, high value transactions. There, I think financial organizations need to be a little more aggressive in terms of security. I want to ask Abhishek, because you are the non-bank organization here. Does your organization, does your community in general try to follow all kinds of RBI guidelines, voluntarily, even those that are not applicable? Or is it better to do your own different strategy?
No, so so as a non-bank and also as a digital first kind of a company, I think see compliance or directions or guidelines from the RBI are most welcome, and I think they have the pulse of pulse on what's happening in the industry, and in the first instance, whatever this at the outset, whatever they say, we believe that's good for the customer, and we definitely want to adhere to it 100%, and we do that without fail. However, in the approach I mean, the way we interpret RBI guidelines, these are guardrails. These are, I would say, kind of boundaries in which we are supposed to operate. But within those boundaries, how do we innovate and how do we make the customer experience better is something that is left to the organization which is doing it. For example, just adding to what Naveen mentioned, so there are to reduce customer friction. What you've realized is when you have rule-based systems, which are, if something happens, do this, right? Those systems tend to be blunt and they tend to sort of obstruct good customers as well. In the last couple of years, we have built our own machine learning based models, which are able to, nuance those rules better. So, for example, your credit data and your fraud data are typically separate in a bank, right? But if you look at somebody with a certain credit history and you combine their payment variables as well as their behavioral variables from the device, you're able to then understand, okay, if this happens, but also check for XYZ. If that doesn't happen, this is not a fraud, right? So, but unless if you create a rule-based system, the system becomes too complex after a point because there are many intersecting rules, and how do you break clashes? So that's where I think machine learning becomes important, and it's a very powerful tool to help where what happens in as an outset in one transaction, I don't have to worry about that, but to be viewed it in the context of the overall transactions of the user is important. So I think that's where machine learning helps to nuance these rules better, improve customer experience, and I think we leverage a lot of that in our security systems to ensure that we do not inconvenience the customer for small things, right? Whereas even if it's a 100 rupee transaction, but it is suspected to be fraudulent, we wouldn't ignore it because it's a 100 rupee transaction. We would still kind of block it because it's not as per the regular pattern of the user. So while the RBI says that okay, below a certain amount or below a certain threshold, it's not you can ignore or you can be a little more lenient. But if you use machine learning, it is a lot more powerful to sort of differentiate between regular and fraudulent transactions.
So, Richard, in your solution, how much of it is human-made rules and how much of it is machine learning?
I would say possibly more than 90% is machine learning. We collect and process in real time over 2,000 data points of human behavior during a session. So there's no ways that you could write rules with the complexity of the syntax with that much data. It's just impossible. So for us to be able to deliver meaningful, business intelligence, behavioral insights, and scores, risk scores back to customers in real time, we have to rely on machine learning heavily. However, having said that, we still want to give customers the option of writing certain business rules into our application. So we do provide the facility for customers to write rules as well. But many of our customers rely almost entirely on our machine learning because of the accuracy. Dhananjay made a really great comment earlier about how bringing signals and data from multiple systems together to give a blended view of risk really helps. And I think to the point around false positives, if you're relying on just a narrow set of data, that's when you start to see a much higher set of false positives. When you're blending signals from lots of different systems, that's when you start to see a more normalized set of scores and the ability to differentiate between fraud and genuine payments or logins or behavior a lot more simply.
And is there an option? You talked about introducing rules into the system, but is there some kind of opportunity or a need for customers to tweak the machine learning part of it? Is that
No,
does that
we
feel right?
offer this as a service. So it's, we have a whole data science team dedicated to ensuring that the machine learning components of our technology stay as up to date as possible. Unlike on-prem services where you've got to constantly upgrade the version to get the latest models, running this as a cloud service means every customer is benefiting from the best models, from the day it gets released. Having said that, though, there's a lot of information we don't see. So we don't see who the payment's going to. We don't see how much the customer is paying. We don't see any of their personal information. So we need other systems like the enterprise fraud management systems, like the information security systems, to all come together through some kind of orchestration layer to then bring all of that data together. So we're just one component of what I see as a much broader enterprise fraud system.
Okay, got it. How are banks and financial organizations keeping up? Give me some of your understanding. How far are you able to keep ahead or stay ahead of these kind of fraudsters? And going ahead, do you see that you need to pump in a lot of money, or do you need to pump in a lot of intelligence, or do you need something else? What is that most important factor that will make sure that the financial sector remains secure and is able to serve that customer base, the growing customer base, actually?
Sure. I think, in my opinion, it would be a combination of all. I think you gave some those vectors, the dollars, the effort, the technology. I think it has to be a combination of all. I think in addition to that, one thing which I really want to share my thoughts on is intelligence, actually. So sharing of intelligence, I think that's very, very important. Because if we I think that the bad actors or the fraudsters, they are well connected, actually. So they find a deficiency in our system, and that deficiency, they share it within the community very fast. Whereas as defenders, even if we find a fraudster, we keep it to ourselves. We don't share it within the community. Our community we are not that open about sharing bad things, actually. So and that's the reason fraudsters, because they are more connected, they are able to always keeping themselves ahead of us, actually. We always try to do a catch-up game, actually, though you're at the background you say Biocatch, actually, but what we are doing is more of a catch-up, actually. Frankly, I don't think we are ahead of fraudster. I think whatever we do, we see that in very, very small period, or even before we mitigate one kind of a trick of a fraudster, there is another 5 tricks which comes, actually. So that's how the catch-up game is. I'm seeing it for years together. I don't think I've ever felt that we are ahead of fraudsters, actually. Trust me, that's how I feel, actually. But I think I think we may be able to make some changes in the game if we start doing some collaboration, some intel sharing, actually, within the good guys, actually. I think that's also is a big thing which I just want to share as a thought of mine.
And I'm curious, do you think this will be beneficial only if we do it within the country, or do you think there's a need to do it across the world?
I think it has to do at a multi-layer. Actually, outside the country, still there are regulatory requirements, as well as there are a lot of organizations who collect this threat intel and they provide it as a service. Even the SAC, this FSISAC, or there are a lot of SAC in Australia. The SAC is very, I would say, very, very prominent, actually. US, the FSISAC, the financial sector SAC, is very, very prominent. Unfortunately, in India, we don't have that kind of a very strong community, actually, where we can collaborate.
Let's see, Banking Frontiers can do something.
No, actually, RBI is trying to do. Right now, with the digital payment circular, they have asked organizations to come up together how to share intel. But I don't think regulator can force that. Actually, till the time we ourselves will not do it, regulator cannot force these things on us. Actually, that's my personal view.
I agree fully.
So I completely agree with what Dhananjay said. But for banking community, we have a threat intel sharing platform under the purview of IDRBT. So what banks do, they share their threat intelligence on a daily basis, and it is being circulated on a real time basis to all member banks. So that has started. I do not say that it is 100% accurate, but at least 50-60% it is good, and we get intelligence from all other banks. So that is on you very your point is very valid. We need to put money, we need to share intelligence, and we need to put the controls, and these controls can be the preventive controls, detective control, and deterrent controls. So we need to strengthen our operational risk system, our auditing system, our fraud risk management system, and customer education is another area that our the people over here said. So all together will give us some kind of protection. And whether who is ahead, or whether we are ahead or the fraudsters are ahead. So sometimes we will be ahead, sometimes they will be ahead. It would be a cat and mouse game.
Cat and mouse. One of the systems you mentioned is the auditing system. Can you share like how that plays a role?
So auditing system now there are real time auditing. So what typically the banks and other organizations follow, that they do the periodic audit. So now there are tools called CATs, that is continuous auditing system. So they will be auditing the systems continuously, and they will be giving you non-compliance at the point. And these inputs may help the fraud risk management system or operational risk management system to take further action.
Got it, Ratan. Thanks.
I'll go back to the basic question, Manoj, that you asked. Will we ever be able to move ahead of the fraudster? At least on my experience, certainly not, because the only objective that we are working along all through the decades is to ensure that the gap between the fraudster and us is not widened. I have to move closer to the fraud as quick as possible, so that the gap doesn't widen. The more the gap widens, my exposure goes high. So the fraudster they don't have the technological challenges of getting into the systems, approvals. If I have to get into a new technology or new system, the banks or the financial institution has a lengthy process of going through multiple rounds of approvals, justifications, and then by the time we get the solution implemented, the fraud would have shifted from A to B, right? Then again, there is a catch-up. I'm not talking about any institution in specific, but there is a protocol, there is a process which every financial institution has to follow. That advantage the fraud community always has. They are always quick to adopt any new technology in place. They are very agile, very much agile than the entire community. And thereby they will always be one step ahead of us. So our job is to ensure that we maintain that one step and that doesn't become 2 or 3 steps. That's the challenge. So on the threat perspective, Manoj, I'd like to put it across in 2 things. One, we extensively talked about the social engineering scams and all those stuff, right? So thereby, Richard also talked about how the behavioral biometric can help, or the pattern, or the customer profiling techniques. All these things, there has to be a combination of multiple factors, not rely upon only the rule-based traditional model of monitoring frauds, right? You will have to rely upon multiple digital attributes, then how the customer reacts, how the customer holds the phone. We talked about multiple attributes related to these kind of digital transaction. So that holds the key. How quickly you adapt to these kind of technological stuff to ensure that I safeguard the customer from fraudster. So that is on the kind of a social engineering scam. Then we talked about customer education, where we'll have to localize the customer education so that the first line of defense is very much strong. Lastly, that we talked about is that data breaches. Everybody talks about large accounts getting compromised. Why do I have to wait for an account to get compromised, then identify the fraud at the time of when the transaction is happening? So tokenization is one other important aspect. We'll have to devalue the data that is getting transmitted, right? More and more the data is exposed over the net. The challenge continue to exist. If I have the card number or an account number or a customer ID is available over the net, as long as I am passing on the card information over the net, where multiple players are consuming the card information, the threat do exist. So how do I, as an environment or an ecosystem, move towards devaluing that particular data, even if the data is compromised through any part of the network, that become obsolete to the fraudster. It should not be of any use. So tokenization is one other important aspect where, as an ecosystem, which we'll have to move towards. I guess RBI is also has issued, has started working towards that. So that is something which, as an industry, we have to adopt as quick as possible.
Yeah, that's interesting, Naveen. Of course, earlier they used to talk about encryption to protect this data, but now taking it one level higher towards tokenization. That's
absolutely.
Also, you indirectly put it that the fraudsters are setting the rules of the game. So, so that's the challenge for all players.
Yeah, I mean, I think mostly agree with whatever the other panelists have said so far. I think unfortunately we're always in that catch-up mode with fraudsters and new defrauding techniques. But I think one thing which has helped us in the limited time we have been in the industry is that we've always believed in taking a very first principles approach in always looking at our systems and saying, okay, where are possible vulnerabilities, and also speaking to customers how they use our interfaces, right? Because sometimes while I might design a system with a particular user flow or a user behavior in mind, the user is actually using it somewhere else. Like, for example, like what Naveen mentioned about having it in vernacular languages, right? A lot of customers, especially in the older age groups, do not tend to operate their payment app. They either give it to somebody in the circle, or they give it to somebody in their family. And there are unintended consequences of that data being shared with multiple people. So understanding how the user is interacting with your own product digitally, physically, or how they store information. I've seen people store passwords as phone book contacts. Also these kind of small things. So once you understand, I mean, while designing a password system, I never really kept that, okay, the user might just not remember it, but he'll store it like that. So understanding how the user plays or interacts with the system is also very important. So if you use a very first principles, common sense approach on understanding the vulnerabilities and keep a ear to the ground of understanding, okay, how the customer is, in the end using your service, I think that should give us a better handle, because I think the fraudsters are more attuned to that and they exploit those gaps faster than we protect it. So yeah, and having said that, I think technology always is usually adopted faster by fraudsters rather than institutions themselves. So I think that challenge will always remain.
Yeah, they don't have to take approvals.
Right.
So Richard, how do your customers see, keeping up with the fraudsters? Are they keeping pace? Are they falling behind? Are any customers saying, yeah, we are ahead of the fraudsters?
Look, I think much like the other panelists have said, it's difficult to be ahead. I think some of our customers would probably say that they're close behind. Others are maybe a bit further behind. I think one of the biggest problems that we're helping solve for our customers is around social engineering. And this is focused on where the victim, your customers, are actually the ones making the fraudulent payment. And if you think about it, the criminal is on the phone with the victim, convincing them to log in themselves from their trusted device. The session, whatever you monitor, it is the legitimate customer. And yet they're making this payment to the criminal's controlled account. And I think this is something that we're very proud that we're able to help our customers with, because the way that a genuine customer makes a payment when it's of their own accord versus when they're being coached by a criminal to make the payment, their behavior is very different. No network analysis, no payment analysis, no device fingerprinting is going to detect this. Really, only behavior has the power to detect this level of sophistication of fraud. Now, I don't know how prevalent that type of fraud attack is in India at the moment, but I know in the UK and in Australia, it's the fastest growing type of fraud that we're currently tackling. So, yeah, fastest growing. Yeah.
Yeah, fastest growing.
Yeah, just to add up to what Richard has just voiced about on the social engineering, I just wanted to talk about how dynamic India is, right? So we had an instance, I'll just take an example where, as you said, the customer device was taken over, the transaction was happening from customer's own device. We identified that to be a fraud. So we declined the transaction and we are on call with the customer. We are on call with so the call was routed. The customer device was taken over, call forwarding was enabled so that when I call as a bank, the call was forwarded to the fraudster. So we came across this trend. So we started having a proper, process of challenging questions, right? So rather than confirming the transaction, so we want to challenge the customer with one more thing, like you tell me your mother's maiden name or tell me your, mailing address. So this process we started, and I'll just take one example where I challenged the customer. We identified that transaction is happening from customer's device, but that is not the customer who's doing the transaction. So we challenge the customer with additional question. We challenge the caller basically that what is your email ID? And that particular caller on the line is just asking us to hold a bit and checking with somebody else that you tell me what is the email ID of this particular account. So that is how evolved the market in India is, right? So they collect all possible information when they do a social engineering. They collect the mother's maiden name, email ID, address, everything. The only thing is more and more you become dynamic. We are only delaying the extent of fraud or the extent of damage that customer can have.
I suspect that the fraudster in the future might be a software robot or something, so that they might do a full KYC of the customer before they initiate the fraud. Maybe I'm just thinking aloud. But yeah, I think it's challenging times ahead. So as an industry, the financial sector working along with the IT and cybersecurity sectors have to work together. And like many of you said, that collaboration is also very important. I think these are some of the key takeaways and customer education before I lose that point. So thank you all very much. Really appreciate all of you for participating in this panel discussion.
Thank you.
Thank you.
Thank you.
Thank you. All the best.
Thank you. Bye-bye.
Thank you. Bye-bye.